Welcome back to Alpha Recap. I'm glad you could join us after the close. We've got a lot to unpack from today's risk-on session. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots happened across tech, retail, and small caps. A pretty energetic finish to the trading day.
So, let's start with the big picture. The market closed up broadly. The S&P finished the day up about 1%, the Nasdaq 100 was stronger, around 1.6%, and small caps led the charge, with the Russell ending roughly 2.5% higher. So, what really stands out here is...
Right, and the key drivers were clear. An earnings beat from Nvidia and a string of solid retail prints led by Lowe's. Those two headlines combined to push traders into higher beta, growth, and cyclical names.
Let's pause on Nvidia for a second. You know this space inside out. How did that print change the tape?
Nvidia delivered a strong quarter and raised guidance, which basically confirmed the narrative that AI data center demand is real and ramping. The report showed accelerating revenue mix toward higher margin data center products, and that lifted not just the chip makers, but software and cloud suppliers tied to AI deployment.
And the effect was concentrated, right? The Nasdaq 100 outperformance reflected flows into AI winners specifically.
Exactly. When the biggest AI names flash strength, you often see concentrated flows into semiconductors, AI-focused software, and cloud infrastructure. That drove the outsized Nasdaq gain today.
Okay, Lowe's was the other big catalyst. Give us the takeaway there.
Lowe's repeatedly beat expectations and gave constructive commentary on inventory and customer behavior. That signaled pockets of consumer resilience in home improvement and helped lift discretionary and certain industrial names.
I mean, when you step back and look at this, the combo of big tech confirmation plus positive retail data points felt like permission for traders to broaden the rally.
Yeah, it moved beyond just a handful of mega caps. The Russell's outperformance showed small cap participation, which matters because it suggests the advance had real breadth instead of being narrowly concentrated.
And that breadth point is important. Technical folks love to see small caps pick up. It signals confidence in domestic cyclicals and growth. So, what were the sector winners and losers today?
Tech and semiconductors led, clearly. Consumer discretionary and retail showed strength, thanks to Lowe's and related coverage on Home Depot. Industrials and materials also saw momentum. Materials often reflect confidence in economic activity. Real estate and utilities had some positive moves, but lagged the aggressive risk-on groups. Financials, however, underperformed.
Let's talk about financials for a moment. That underperformance stuck out. Why were banks weaker during a risk-on day?
Banks faced headwinds tied to rate expectations and regulatory commentary. Traders remained cautious about net interest margin pressure. That's the difference between what banks earn on loans and what they pay for funding, and potential regulatory costs. So even with a broader rally, finance lagged.
Right. And the other thing is, even when the overall tape was positive, money favored companies with clear, scalable earnings rather than rate-sensitive names.
Absolutely. Today rewarded companies that showed strong top-line demand and margin improvement. Think AI-related hardware and software, while rate-sensitive sectors took a back seat.
Quick reactions.
Yeah, that tracks.
Let's hit some individual movers. Nvidia led the tape, Lowe's helped retail, Qualcomm benefited from chip optimism, and Home Depot got a boost from analyst coverage. BP popped in energy conversations, but energy overall was mixed. Cannabis and crypto were idiosyncratic. Honestly, I was a bit surprised by this one.
Yeah, the nuanced reactions in energy and crypto show how idiosyncratic drivers can be, even in a broad market day. BP drew some value-focused commentary, but without a sector-wide tailwind, energy stayed range-bound.
A couple of listeners asked about Qualcomm. Why did it do well beyond the GPU names?
Comments around Qualcomm's flexibility to capture AI-adjacent demand resonated. Investors are looking beyond the largest GPU players and considering which suppliers can benefit from the broader AI stack: mobile chips, connectivity, even specialized accelerators.
Let's explain breadth and rotation for listeners who aren't market pros. How would you describe what happened in plain English?
Sure. Breadth is just how many stocks are participating in a move. When a handful of big names push the market, breadth is narrow. When many stocks, including small caps and cyclical names, rise, breadth is wide. Rotation is when money shifts from one group, like defensives or financials, into another, like growth or cyclical stocks. Today, we saw both, better breadth and rotation into tech and cyclical names.
Good explanation. And on the Fed and macro front, the narrative didn't disappear, did it?
No, not at all. Traders gave priority to corporate fundamentals today, but the higher-for-longer rate backdrop and incoming economic data still matter. Markets will reprice quickly if inflation or jobs prints change expectations, or if Fed speakers push a different message.
So macro risk is still in play. That's worth repeating.
Exactly. Earnings can move markets strongly, but they don't erase rate risk. Financials' relative weakness was a reminder of that balance.
A quick technical note. The S&P clearing short-term resistance and the Nasdaq leadership reopening concentration questions. How should listeners think about that?
Technically, the session looked constructive because more names participated and trading volume in tech and cyclicals was elevated. But history shows earnings-led rallies can be volatile if follow-up prints disappoint or macro data surprises. So it's a positive signal, but not a guarantee.
So, what should we be watching tomorrow and in the near term?
First, follow-up earnings in semiconductors, software, and retail for confirmation of today's narratives. Margins, orders, and inventory commentary will be key. Second, any fresh inflation or labor market data and Fed remarks could shift rate expectations. Third, watch whether small-cap leadership continues or money rotates back to mega-cap defensives. And finally, keep an eye on crypto and regulatory headlines. They can influence correlations with risk assets.
Short reactions, right. Before we wrap, let's boil this down into 3 clear takeaways.
Okay, 1. Nvidia's beat and raised guide reinforced the AI data center momentum and lifted the broader tech complex. 2. Lowe's and retail strength showed pockets of consumer resilience and helped broaden the rally into small caps and cyclicals. 3. Macro and Fed risk remain relevant, financials underperformed, and further data or Fed comments could quickly change the tone.
Concise and useful. A brief reminder. This discussion was informational only. It wasn't a recommendation to buy, sell, or hold any security, and it didn't provide personalized investment advice. Analysts note the risks and uncertainties that can affect market outcomes.
Right. The market closed with a risk-on tilt today, leaning into AI and cyclicals, but that posture can shift with new data or earnings.
That's all from us for this recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening.
Thanks. Talk to you all tomorrow after the next close.